Hello there. This is Mr. Chimé from weeklybegel.com, and I'm back today with another episode of the Weekly Bagel podcast. Today, I want to talk about saving to move out, which is an expansion of last episode 2 of the Weekly Bagel podcast, where I talked about moving out of your parents' house and the step-by-step approach to get you prepared before you move out of your parents' house. So today's topic is going to be an expansion of episode 2. If you listen to episode 2, moving out of your parents' house, I talked about how you could set yourself up for success. And this is through, getting a job first and then saving for 6 months. And while you're saving for 6 months, you're working on your credit score. And I talked about how you could work on your credit score. And on the fourth month, out of the 6 months that I gave you, you should start looking for an apartment using an apartment locating services. And I also discussed about how to find apartment locator services because each city has one. And discuss about the importance of saving for 6 months and the logic behind it. So today I'm going to be talking about the right kind of bank account to use to save for 6 months, if 6 months is what you want to save for. Why is this very important? Saving to move out and getting the right bank account for you to help you accomplish this goal. Well, some bank accounts can be a financial burden to you. This is especially if you get a bank that does not meet your financial needs. In the United States alone, we have different kinds of banks out there. Each bank is tailored to meet its customers' financial goals and needs, and each bank is created to serve a specific section of the population. Here's what I mean. Excuse me. Banks like investment banking or investment banks only serves people that have huge amount of money to invest, right? And if you're looking for any other things, like if you're looking for bank accounts to use to save, only for savings, such a bank may not meet your financial needs. And so why I said that each bank here in the States serve a specific section of the population and provides each customer services tailored to their needs. In the States, you may find variation of banks, but mostly they fall under credit unions, online banks, and investment banks. You have insurance banks, and you have your traditional banks. Your traditional banks are usually like the brick and mortar banks that you find on every block in most cities in the United States, right? And as a working class adult that is trying to move out of a parent's house, the kind of bank that you need while you're saving for 6 months is going to be one that will help you meet that saving goal without actually becoming a financial burden to you. What do I mean by financial burden, my dear listener? But let me tell you a story. When I first moved here to the States on the second year, I got a bank account, a checking account actually, that I thought was going to help me with my daily expenditure, right? Unfortunately, the checking account became a burden to me in the sense that I was actually paying monthly to maintain the account. And given my naivety then, I did not know that there are checking accounts out there that are actually free. So in a year, I would pay a few $100s to have the bank account maintained. It was called bank account maintenance fees, which to me didn't really make sense. And I continued to pay for it because they had another requirement that required me to pay a minimum balance every month. And being a young working class adult then, I think I was very young. I was in my early 20s. I wasn't really making enough to be putting money in there every month in order to meet the minimum deposit, and hence the monthly fees that they charge me. Yeah. So I feel like we have to be really aware of the kind of bank accounts that we go for, especially if we are making a living and we're just trying to save and take care of our monthly expenses. And now, in your case, as someone that is trying to move out of their parents' house, if you're saving, you need the kind of bank account that will keep your money safe without actually eating through the savings that you're trying to set aside. Now, selecting the right type of bank account for you. In the United States, there are four main types of bank accounts. You may find variations in different banks, or each bank may offer a variation of what I'm going to tell you right now, but they all fall under this, at least the goals of such bank accounts. You have savings accounts, you have a checking account, you have something called a money market account, and you have something called a certificate of deposit. And I'm going to elaborate on each one. And we also attach an article to this episode that elaborated more on these four types of bank accounts. So that way, you can read through it and see more information about what I'm trying to tell you. Now, for a savings account, most banks, especially the traditional ones and the online banks like Sophie and Azios Bank, um, offer savings accounts. And the goal of a savings account is just simply to help you save. It's not for you to tackle your daily expenses. This is because the savings account does not come with a debit card. It does not come with a checkbook. It doesn't even have a credit card attached to it if you want to apply for that. It's strictly for savings. And a traditional savings account, we have an interest rate of 0.45% as of 2025, according to the Federal Deposit Insurance Corporation, the FDIC. The traditional savings account will give you an interest rate of 0.41%. That is how much any money that you put into a traditional savings account is going to generate in interest. And when you do the calculation on this, it's very low. I've always I've always felt that it's an insult that when we put money into our traditional savings account, banks are paying us 0.41% interest rate on that. Why they use our money and generate way more than that as they loan it out to their other customers. But what can we say? So, as a working class adult that is trying to move out of your parents' house or that is trying to get a bank account, you need a savings account. This is because you're gonna be saving money, right? And you need an account that will help you set aside money. And the best account that will help you set aside money is a savings account. Now, will you always get 0.41% as interest rates on your saving account? No. There are variations of savings accounts out there, especially recently within the last decade. Online banks have started to give a higher interest rates on their savings accounts compared to their traditional counterparts. Banks like Sophie, Azios Bank, and Chime, and other ones out there are giving interest rates that ranges from 3.5% to about 4.86%. We'll be talking about this later in this episode. Um, I also want you to be aware that with any savings account that you get, you're only permitted to withdraw at most 6 times from the savings account. Remember, I told you how savings accounts is created by banks to encourage savings. There is a restriction on savings accounts to help encourage savings, and that restriction is that you cannot withdraw more than 6 times per month from such an account. So this is what I want you to be aware of. Now let's jump to checking account. A checking account is an account created for handling your daily expenses. Say if you have finally moved out of your parents' house and now you have bills to pay. You have rent, you have water bills, you have tuition, you have food expenses, car notes, insurance, you name it. And these are going to be deductions that are going to be happening on either a daily basis or a monthly basis, right? A checking account is created to handle such expenditures. A checking account comes with a debit card, it comes with a checkbook, and when you have a checking account, you can qualify for a credit card too. Now, most checking accounts offered by banks, they do not pay interest on monies, on any money that you put into them. But there are some banks that offer a variation of a checking account called an interest checking account where you can generate interest. According to FDIC, as of 2025, this kind of checking account will only pay you an interest rate of 0.07% in any money that you put in there, which is way lower than the interest rates that savings accounts pay for money deposited into them. So, as someone that is trying to move out of a parent's house, you're also gonna need a checking account, to help you set up your automated rent payment or car note payment or insurance payment or whatever kind of bills that you have. This is because the checking account will come with a debit card that you're gonna use to go out and purchase your groceries and goods and services, and the checkbook should you have the need to write someone a check. Yeah. Let's talk about certificate of deposit account. A certificate of deposit account, in my own personal opinion, is like a savings account. It's like a savings account in the sense that it's offered by banks to help you set aside money that you don't want to use immediately for a period of time while the money is generating a fixed interest rate. The interest rates offered by certificate of deposit are usually competitive because different banks offer different interest rates on certificate of deposit accounts, and sometimes it's actually higher than a traditional savings account. So when going for this kind of account, I always recommend you do your research, to see if you could find accounts that have a competitive interest rate than what your bank is offering. And according to the Federal Deposit Insurance Corporation, FDIC, as of 2025, a certificate of deposit account, when you deposit money in there, we pay you 1.31% for a 60 month deposit. Now, I believe I didn't really elaborate on certificate of deposit account. Let me tell you more about this. Well, a certificate of deposit account, simply put, you give the bank your money. The bank takes your money and locks it up for a period of time. It could be a month, it could be 60 months, and they will tell you the amount of interest rate they're going to be paying you, and it's going to be fixed throughout the entire period. And you're not allowed to withdraw the money. If you withdraw the money, there will be penalties on withdrawal, right? And the money that you put into a certificate of deposit account will be generating interest until the end of the agreed period. Yeah. Now, for a 1 month CD, the national interest rate on that is usually about 0.22%. But if you're gonna go for 60 months certificate of deposit, you're gonna get about 1.31%. This is according to the Federal Deposit Insurance Corporation, FDIC. Yeah. For me personally, I would not really recommend certificate of deposit because the interest rate is low. I mean, it's perfect for you to save up to 6 months as someone that is trying to move out. But there are better options out there, which I'll be discussing shortly. The interest rate on certificate of deposit is very low. I mean, you wouldn't really get much out from it. Like I said, I'll be discussing more about, out of all these things that I'm going to tell you, the best bank account to go for to help you meet your savings goal. The next bank account that I want to talk about is something called a money market account. Money market account is a variation of savings account, right? You put in money and it's generating about 0.64%. This is according to FDIC. Now, what you need to know about the money market account, what you need to know about the money market account is it is similar to a savings account and a checking account. Usually, the interest is higher than your regular savings account. And unlike a certificate of deposit account, you can deposit your money and withdraw your money easily from a money market account. But the thing that you gotta know is the number of withdrawals you're gonna make in a month is restricted. Good, and if you pass such number of amounts, you might get penalized depending on the bank. And like I said, the interest rate on this one is about 0.64%. So for me personally, I would say it's still low, right? Yeah. I mean, it's higher than the traditional savings interest rate of 0.41%, but I still wouldn't go for it if I were you. Yeah, especially if I'm trying to save to move out of my parents' house and I want a little bit of money, generated by the savings that I'm doing. You want a capital appreciation. It may not be substantial, but at least something other than the money that you've saved during the duration of your saving period, right? Yeah. A money market account, I personally, I don't think it's a very good bank account for you to have in order to meet this saving goal because you're saving to move out, right? Now, which bank account will have you meet your savings goal out of the four bank accounts that I just mentioned now? Remember, your goal is to save for at least 6 months, like I discussed in episode 2, so that you have enough to get an apartment and have enough for a rainy day, just in case if you suddenly lose the job that you have, you won't be out in the streets. Surely, I don't want you moving back to your parents' home, right? Because if you listen to episode 2, I talked about the pride of moving out of your parents' house. It's something that comes with a mentality shift, it's a level of maturity. It's the first step to financial independence, right? And the goal is once we have moved out of our parents' house, we don't want to come back, right? Unless, we're coming back to visit them. And I would like that to remain like that, right? So, as I talked about in episode 2, if we are saving for at least 6 months to move out, we want a situation whereby savings, if we put it in a bank account, is going to have a little bit of a capital appreciation. And if we decide to go for 10 months or say for one whole year, when we finally utilize the savings that we have, we're not just going to get only the money that we put in. We're going to get the money that we put in and a little bit of capital appreciation, a little bit of money in there, a little bit of interest, you know. And 0.45% of traditional savings account will not cut it for you. And 0.64% of money market interest rate will not cut it for you. And 1.31% to 0.22% of CD accounts will not cut it for you. So, which bank account will help you meet this saving goal, my dear listener? Well, I would prefer you to go for something called a high interest yield account, also known as a high interest savings account. Why is this very important? Well, I will tell you more about this high interest yield account. A high interest savings account is an account that offers interest rates that are way higher than what your traditional bank offers, or what your traditional banks offer. I meant to say, what your traditional bank, what your traditional banks offer in their traditional savings account. Sorry, I had a brain fart. Yeah. So if you remember clearly, I mentioned that the traditional savings accounts offered by traditional banks, their interest rates are usually about 0.45%. As of this year, it's actually 0.41%. Well, online bank accounts found a way to compete with the traditional brick and mortar banks in the sense that they started offering interest rates that are way higher than these traditional bank interest rates. Take, for instance, a bank like Sofi, Sofi, we give you 3.80% or 3.80% on any money you deposited in its savings account. Now, if you look at this interest rate, it's way higher than your traditional interest rate, right? Let me give you an instance using Sophie, for instance. And Sophie is not paying me to tell they're not giving me any money to tell you this. I'm giving you an example, right? This is not an affiliate marketing of any kind. This is me just explaining something to you using an illustration. Sophie, which pays about 3.80%, say you decide to save for 8 months. You know what? Let's do 12 months a year. You decide to save for 12 months before moving out of your parents' house, and You got a job, hopefully, like I talked about in episode 2, a job that pays at least $15 an hour, preferably $18 an hour. Um, and you're putting aside $1,000 every month because you've sat your parents down or you've sat your guidance down and you've talked to them about you trying to work and put aside money so you can hit your saving goal, and hopefully they agree with you. Now, if you're putting aside $1,000, in 12 months, how much are you gonna have? You're gonna have $12,000, right? And say you're using a bank like Sophie, which pays an interest rate of 3.80% on savings, and you've been saving, you've been putting aside money, and you want to do that for 12 months. On the 10th month, you have $10,000, right? Now let's multiply this $10,000 by 3.80%. That's gonna give you that 8,000, and you're gonna divide that $8,000 by 100. And your capital appreciation on the $10,000 is $380. $380. That's a few $100 capital appreciation in 10 months. Now, let's talk about what your traditional bank will offer you for the same amount of money using 0.41% interest rate. So you have $10,000 that you've saved in 10 months, right? Multiply it by 0.41%. That's going to give you 4,100. Divide that by 100. That's $41. A mere $41. That is what you're going to get. Mere $41 on $10,000. You see why I'm telling you that using the right kind of savings account is going to help you get your goals faster? Yeah. Imagine you decide to use a bank called Asios Bank, which gives an interest rate on savings up to 4.86%, and you are on your say you're on your 12th month. You have been saving for one whole year, like you decide to do. You're gonna have $12,000 if you're putting aside $1,000 every month, right? So let's do $12,000 multiplied by 4.86%. Divide that by 100. That's going to give you $583.20. That's your capital appreciation on $12,000 when you set aside $1,000 every month to save up to 12 months in a bank like Asios Bank that can pay you an interest rate of up to 4.86. Now, I'm asking you this question. Tell me, my dear listener, would you rather go for a traditional savings account, or would you rather go for a high interest yield account? From these illustrations that I've shown you now, you could tell that if you're gonna meet that your saving goal, high interest savings account is the best thing to go for. And most of these high interest savings account, let me tell you, they are free, right? You don't pay fees monthly. I mean, they do have some policies that require you to make a monthly minimum deposit to make a minimum deposit every month. Some of the banks may say, hey, for you to keep getting this interest rate, you have to deposit maybe $100 every month. Well, if you're gonna be saving and you're putting aside, for instance, $1,000 every month, I think that already met the minimum deposit requirement. So you will not be charged. And some of these banks out there that offer high interest rates on their savings, some are free, some are totally free. They won't charge you a penny for it. Majority of these banks that you're gonna see are gonna be online banks. I know some people, like when I talk with my friends and some people about online banks, like Sophie, Asios Bank, Chime, and all that. They're like, no, 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 they don't want to do that because online banks, they don't have credibility. I disagree. Online banks have credibility. In fact, in my own in my own personal opinion, I think they're going to take over within the next 20 years or so. Because majority of the traditional banks now are beginning to emulate these online banks. Because these online banks are setting standards in the sense that people don't have to drive to a place and queue up on a line to get banking services, right? All they have to do is just call or go on their laptop and they, get what they want. Yeah, that's one of the pros of banking with online banks. And there are some traditional banks out there that have changed their interest rates to match some of these banks out there that are offering high interest rates on their savings accounts in order to keep up, right? Right. And whatever it is that they're all doing, I think it's benefiting us, young working class adults, because now we have very competitive rates to go for, right? It's no longer, traditional banks interest rates of 0.41% that is spread across most banks in the United States. Now, nowadays you have high interest rates accounts that are very competitive. They have very competitive interest rates out there, and you could just select the one that will work best for you. And that's one thing I like about saving with high interest savings accounts. The interest rates that each bank offers is not really the same as the next bank. They are all competing amongst themselves, and at the end, who do you think is benefiting from it? It's you, the young working class adult. It's me, the young working class adult that is trying to make a living, right? Um, so a high interest savings account is the best thing for you to go for. I actually wrote an article on the seven best high interest rates savings accounts that you know you need to know here in the states, and some of them can pay up to about 5% interest rates on your savings. I know it sounds unbelievable, but you could go and do your research after you read the article. I don't want you to swallow everything that is being said to you without actually doing your own research. Go and do your research. These banks are insured by FDIC up to about $250,000. What that means is if the bank ever goes bankrupt, your money is safe. You're gonna get your money back. And these banks are really really good. Their capital is also huge. It's in the billions, and they make life very convenient for you know young Gen Zs, adults, and millennials, and every other young working class adult out there. In my personal opinion, I think they do, because then we don't really have to put up with some of these traditional banks that have been long in existence for a very long time now, and therefore they do not take their customers seriously. These ones do, and that's one thing I like about them. And that's why I'm recommending you to take that money that you're going to save for 6 months and put it in a high interest savings account. Go and read that article that I'm going to attach at the end of this episode. It's going to be called seven best high interest savings accounts in the United States that you need to know. And each of the bank that I recommend there, go and do your research and see what the interest rates are and compare the interest rates and see which one is very good for you. For me personally, I will go for the highest, because if you're gonna be putting money aside for months or for a few years, depending on the time that you want to move out of your parents' house or your friend's house or your guidance house, you want that money to be able to generate a substantial interest on it. Um, that's all I wanted to talk to you about today. I wanted to, elaborated on what I talked about on episode 2, and I felt like this topic, saving to move out, and the right banks to use for that is the best way to go about it. Because I didn't want it to be like, okay, well, I dropped this wisdom nuggets, and I didn't really, I didn't really expanded much on it. Um, I'm gonna be expanding more on that episode too. In the subsequent episodes that I'm going to be uploading, and I hope that this one here. We help you select the right bank for you to put that savings into. Um, Listen, I am very, very proud of you. And as a fellow working class adult, we're all in this journey together. And I feel like the best way that we could, you know, develop and enhance our art of living is by lifting one another up. You get what I mean? And if me, releasing these episodes every week and talking to you, and hopefully, you're listening and you're making the right choices for yourself. Um, if I could do this, I think I'm gonna be very happy, and I'm happy. I'm happy in the sense that I know that you're making me proud out there. So I think on a good note, I'm gonna end this episode here, and on Sunday I'm going to release another episode, and hopefully you come back and you listen to it. Now let me tell you something. This journey that we're all into, right? I saving to move out of our parents' house or moving out of our parents' house. It's a very important one, right? It is so important because it decides how the next years of our lives are going to be. If we don't plan well and we embark on the journey, chances are we're going to fail. But I don't want you to focus on the failure, right? We have been born into this beautiful world, and it is left for us to decide what our lives are going to be about. So, any decision that you make from now henceforth, I want you to do it bravely. You are a warrior. You are he. You are she. And I'm rooting for you. Well, I remain your host again, Mr. Chime from weeklybego.com. And I hope you have a very good day. Thank you.